Hey everyone, welcome to the sweep. We're going to get started here in just a couple seconds. Feel free to chat in, say hello. Let me know you guys are out there in virtual world. Of course, as always, if you have questions, feel free to ask those questions. At some point, we'll get to them within the session. All right, let's get rolling. Okay, so we're going to recap Forex news again like we do every week. So let's go ahead and pull that up really quickly. So it's going to start, of course, on Saturday. This is Saturday, September 11th. So pretty big day, a day of remembrance. We have Ecofin meetings for the euro, and that looks like that's it for Saturday. Obviously, most times on Saturdays we don't even have announcements. So this Saturday we do have an announcement, but not anything to be too concerned about. And then Sunday we've got some low impact. Let's go to Monday. Monday we've got one red RBA Governor Lowell speaks. That's for the Aussie. That's 8:45 p.m. Mountain, so that's 10:45 p.m. Eastern for those of you guys that trade in the evenings. And right here on Tuesday, we've got CPI month end and core CPI month end. Those are the only two red announcements. And then the CNY has retail sales year end, and that's medium impact, so not so much there either. Wednesday, September 15th, we've got CPI year end for GBP, and then CPI month for the CAD, and then a lot of common and media CPIs, trim CPIs, and those are all medium impacts. Empire State Manufacturing Index for the U.S. dollar, and then industrial products production and crude oil inventories. And right here, NZD, we've got GDP. Hey, Andre, good to see you. And then Aussie at 7:30 p.m., we've got employment change and unemployment rate, so keep an eye out for those. Those are high-impact announcements. Of course, we don't trade these announcements. We just want to be aware of them, so we avoid these announcements. We don't want to trade announcements. If anybody tells you to trade announcements and that's their trade strategy, run the other way and go to Vegas instead. You'll have a lot more fun, and at least you have fun losing your money, right? Okay, September 16th, this is Thursday. President Lagarde speaks for the Euro, ECB president, and core retail sales and retail sales for U.S. dollar. So keep an eye out for those. Friday, we've got a really soft Friday, so we got retail sales, which is medium impact, and then UOM consumer sentiment, and that is for the U.S. dollar, and that's supposed to be medium impact. Okay, good. All right, let's go ahead and get cracking. That's the news. Excuse me. Okay, so I want to show you guys a new setup, and this is another member submission. So one of our members submitted this setup, so I want to break this down for you guys, show it to you guys, see what you think. Primarily because it's on a chart that we don't usually use, or we don't use very often, which is a 1-minute chart. Okay, and the thing I love and hate about trading on a 1-minute chart in any market, and we're going to look at the Forex, of course, but in any market, is just that you got to sit there and just stare at it, right? Because every minute you have an opportunity, literally every 60 seconds, you have an opportunity for your trade to occur, right? Well, depending on what your trade is, if it involves, you know, being overbought or oversold or something like that, then perhaps you may end up with a few minutes in between being able to evaluate whether or not your trade setup is there. But for this one specifically, it's every minute. It's every minute that you can evaluate. And so let me explain it to you. Now, and it's something that I've been playing around with, but it kind of blows my mind because, first of all, I'm not a TNT guy. You guys know me. I don't really focus on TNTs. For those of you guys that are not aware, TNTs are these indicators right here, our proprietary indicators. I'm not a big on TNT. It's not that they're not good. It's just I like to be able to just at a glance look at the major, minor, and pressure and know right then what I'm going to do. TNT is not that way for me. In addition to that, for me, the way I see it is a lot of times it's really lagging, right? It's, you know, thick orange is pointed down, right? So let me just give you an example here. And I'm not trying to discourage you guys from using TNT. I'm just explaining why I don't have a lot of focus on TNT. And some of you guys are just like me, and others love TNT. You guys kill it with the TNT, especially this person. So I mean, right here we can see, with the exception of the flats, right? So that's flat. But most cases, right? Market move down, thick orange is down. Market move down, thick orange is down, right? And sometimes it doesn't go from flat to down, sometimes, or flat to up, right? Sometimes it just goes up and then to down. And sometimes it's giving us a reverse indication, right? So, for example, like right here, for example, we're pointed down, now we're pointed up. Why are we pointed up? We're pointed up because the candle moved up, right? So it's just kind of mimicking the movement of the market, which for me is delayed. I want to know that I should take a trade right here up, not after the market's already moved up. Right? And part of that, by the way, is because when you trade larger lot sizes, let's say, let's just say 20. Let's just say 20 lots, right? That's only $200 a pip. So you're trading 20 lots. Well, there are some times of the day and of the months even where you're going to catch slippage, right? And I'll briefly talk about slippage because it's relevant to what I'm talking about here with lots. But let's say that you entered a trade right here, and it's for a buy, and you have a take profit right here, and it's 5 pips away. It's not even very many pips, right? Okay. And the market moves up, and it hits that take profit with spread, and it takes you out of the trade. So here's what the broker does, and it happens instantaneously, okay? You're taken out of that trade, and you're awarded your profit. Now, let's say that all 20 of these lots cannot be filled right there. That means that there aren't enough people going the opposite direction to take those 20 off your hands, right? So right here at four pips, it's going to check. And then 3, it's going to, every micro pip it's going to check, but we're just going to use regular pip. And then 3 pips and 2 pips and 1 pip. Finally, it's going to go here. It's going to say, okay, what about at its entry? And if at any of those places it's not able to fill all 20 of your lots, so it's not going to say, well, I can fill 10 of them here and I can fill the other 10 here. It's going to say, can I fill all 20 at any of these levels, right? And if it's not able to, it's going to find the next available level where it can, in fact, fill the 20 lots. And sometimes it could be below your entry, and you would lose money, right, for a winning trade. That's a real thing. That happens when you're trading on the wrong currency pairs, or maybe you're using too large of a lot size in a slow time of the market, or a number of different things, right? But these are things you want to be aware of, okay? So the advantage sometimes, and I realize I'm starting to sell the TNT or the lack of TNT now, but and some of you guys can see it quite predictively, and that's awesome. I just haven't spent a lot of time with it. It's not for me, but a lot of times I'm taking a buy trade here, right, as the market has moved down, and I'm taking a long trade, right, because I like those reversals. The biggest reason why is because but you can use a larger lot trade in these scenarios. Why? Because everybody is doing the opposite of what you're trying to do. And so that means that there's plenty to be able to get to where you're going and fill your trade, right? Because there's plenty of counter movement. Okay, so just wanted to throw that out there. All right, so let's look at this setup. So this is really, really bizarre, okay? I've never noticed this, and hats off to the kid for noticing this, okay? Check this out, okay? The thick orange value is negative 18.41041. 41041. Check this out. All the way to that last value, that last decimal place, this all 41041, okay, there are times where the thick orange line will move exactly 50 points. Not points in terms of dollar value or pips, but just exactly 50 points. So 18, if it goes down 50, would be 68, right? Negative 68. If you're looking at green chart 1, it's a little different, or green chart 2, it's a little different. This would be 6.8, but actually it wouldn't be 6. It'd be different because 10 is on top and 0 is on bottom. But anyway, here it will go 68.41041. Exactly 50. Watch this. 18.41041. Boom. 68.41041. Exactly 50. Exactly. Okay? Right down to that last decimal place. Which is really bizarre, right? Okay. So, right here, majors agree. That just moved that 5, and so there's going to be a short that occurs. We'll just use a 2-to-1 today, a 4-pip stop loss, 2-pip take profit. Because it's a really quick, it's not, depends on what time you're trading it, but it can be a really quick scalp, okay? So 4-pip, stop loss, 2-pip take profit. That's a 2-to-1 risk to reward. Okay. So that would be our entry at the end of that 1 minute, which means I want you guys to see this, okay? Now watch, from right here, I'm going to replay the chart. Because this is one of those like anxious, if you're like the anxious type, and if you get rushed, it doesn't make you feel very good, this is probably not the trade for you, okay? If you don't mind that kind of stuff, I don't mind that kind of stuff. You know, if you don't mind that kind of stuff, you'd be just fine in a trade like this. But if you're the type that gets anxious, if you feel like, you know, you have to pull the trigger really quickly and stuff like that, this is definitely not the trade for you. So I want to play this out, though, because I want to show you guys kind of what this would look like, okay? So here we are, and we're waiting for our value to be established. And so we've got 34 seconds, and we're just kind of waiting around for that, right, till it gets closer to like the 0 mark in time remaining, right? So we got about 24 seconds. 20 seconds, so still waiting on that. Let's wait for that. 15, 10, about 10 more seconds. Okay, 3, 2, 1. Come on. Okay, so right there, I go back really quickly. 18.41041. So now I'm looking to see, am I going to get to 68.41041? And there we are. We're at 68.41041. We got 57 seconds. Let's fast forward this a little bit. 38. 17 seconds. Okay. 17 seconds. And we're waiting for the post. So we're at 68, negative 68.41041. If it's moving around a lot, it could very well get you, right? But you have to be on this. You have to be watching this sucker. Okay, 68.41041, we're good. As soon as the new candle comes out, come on. It's only going to move when the market moves. Right there, boom. Actually, it kind of gapped up a little bit, right? So right there, that's where we would have entered the trade. Okay. Now we want to go down by 2 pips, so 18.323. So we're going to go to 18.303. Right there. And then our stop loss is going to be 18.363. 18.363. All right. So this looks like I just looked at today's examples. So this is just from earlier today. Okay, so let's speed this up. Let's go 100. There you go. Holy cow, 100 is too fast. Let's go 50. So we're looking to go short, right? It's moving long right now. still a little fast. So a little bit of back and forth. Oh, there's another one. And here's another thing they have to consider with these setups, okay? Look, let's say, and these perform at like 80%, 70, 80% with similar stop loss and take profit. Just some parts of the day they come out faster, other parts of the day they're slower. So, I mean, some parts of the day when I'm looking at these, they're like, I mean, the first couple seconds within, you know, a minute, they're filling. But let's say we were at 80%, okay, because this is where you got to be careful. Let's say we're trading these at 80%, okay, with a 2-to-1, which is really good, really, really good, right? 80%, 2-to-1, and we're using, let's say we're using 2%. That means that if I take this, if I took that first trade, I'm risking 2% of my balance. And then I'll take the second trade on 2% of my balance, or, well, I wouldn't do equity, 2% of my balance, right? So then I would be at 4% of my balance prior to that first entry, right? I'd be risking 4%. And if I run into another one, then that would put me above 5%. I don't want to ever risk more than 5% of my account at any given time, right? So 5% max, which means if I have to take 3 trades, I'm going to take the first one at 2%, I'm going to take the second one at 2%, and I'm going to take the third one at 1%. And that's going to be a maximum of 5. I hit my max. I can't take any more until one of those closes, and then depending on which one closes is how much risk I'm going to use for that next trade. So that means if this one closes, then I can use 2%. But if this one closes, then I can only use 1% for that other trade. Okay? All right, so here we are. And right here, we can see that this one posted at negative 43.30765. And right here, it is negative, no, wait, where is that? Oh, it's the next one, I think. I think I have that one marked incorrectly. Actually, that's not, yeah, that's not one. That's for a different setup. Okay. Yeah, 43.30765, 88.37213. Yeah, so that's not even one. Okay, we're not worried about that then. Okay. So let's keep going here. Our entry, by the way, we're right about at our entry. So it looks like a lot, right? But I mean, we've only been at this for about, there we go, it took profit. So right there, it took profit for us. Okay, good. All right, so let's go back. And to about right there. So let's see how long that took. Oh, about 22 minutes, right? It just looks like a lot, but they're 1-minute candles. So it took 22 minutes. Obviously, it did draw down a little bit. It went negative prior to going profitable for about 1.5 pips. So not much. Okay. All right. So let's go back to another one. Get rid of these lines. Okay. So that's the one we just did. Let's go back. So I think I started on the wrong end. Yeah, here we go. Okay. So right here, again, we've got negative 27.84272. So right here on the previous candle, on this candle right here, watch the value of the thick orange. 77.84272. And then 27.84272. Exactly 50. exactly 50, right down to the last decimal. It's wild, right? So right here, that would be, majors are pointed up. That would be our entry, 18,315, and our take profit would be 18,335. Now, of course, we're not concerned about the little amount of pips, because 2 pips can make the same as 20 pips. It's just a matter of how much you're risking on that trade. 18,315, stop loss would be 27, 18,275, right? All right, let me double check that. Yeah, okay. So 4 pip stop loss, 2 pip take profit. Okay, let's go forward. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15, 20, 27 minutes. So again, 20 to 27 minutes. I mean, that's not terrible, but yeah, 6 candle rule is not going to apply here. Not on a 1 minute. I mean, we'll use, up to 12 candles on a 5 minute. So on a 1 minute, we're not going to use 60 candles, but we could, right? We could use 60 candles. I would say, yeah, this one would be tough, right? It'd be tough to backtest because there's going to be a bunch of them, right? Right now we've done 2 of them, and I don't even think we've gone half an hour, or maybe we have, right? But they overlapped. You saw that. There was this one and the one that we just saw, and they would have been in at the same time, right? We would have been in this trade, and then we would have taken this trade, and then that trade would have filled, and then the other one would have filled later. Okay. So, we could do, I guess we could look up to 60 candles, like 60. Just thinking about it, we could probably do 60 candles. Because 6 candles, even high volume, you might not get what you're looking for. It just depends on what time you're trading it for sure. But yeah, I would say you could go up to 60 a whole hour and test that on that one setup, or maybe even cut it in half, or do your data and just say, okay, this is what happened after 30 minutes, this is what happened after 60 minutes, and see which one's valid. I would say do a 3-month test. Go back 3 months and just test it for the times that you trade and see, okay, what if I did only 30 minutes? Okay, what did that give me anything significant? Okay, what about 60 minutes? Right? So 60 of these candles I think would be the max, though. I wouldn't go beyond that. Okay, so let's go back to the next example. Right there. Again, so negative 13,75061. And if we go back here, it's negative 63,75061, which is exactly 50, right? Because 63 to 13 is 50, and then the decimal places, 75061, are all there, 75061. So right there, that would be a long trade. And I'd like to explain to you guys what's going on here, but I don't know. And that's not something that I ever say. But I really don't know why this works. I just don't understand what's going on with the value there. I'm perplexed. And I mean, just case in point, a lot of times because the values on the thick orange are different between the green chart 2 TNTs especially and green chart 1 TNTs, I wouldn't expect to get the same result, right? In other words, so here, if this moved by, it couldn't move by 5. So the exception, by the way, to this trade is not when it's at 0 or 10 or negative 100 or 5 or 50 on green chart 1. So right here on green chart 2, it can't be 0, can't be 10, and it can't be 5. So if it starts at 0, then we're not looking for it to drop by 50. If it starts at 50, we're not looking for it to go up or drop by 50. And if it's at 10, we're not looking, or 5, we're not looking for it to go up or down by 5. Okay, so those are the only exceptions. But you can see that even on the green chart 2, so I'm just going to go back and I'll find one really quickly. So let's just go back to, okay. So 6.7, so right here, if this is 6.7506, then if it went down by 5, then it would be 1.7506, right? So the easiest way to look for these, by the way, is like this. Just look for these numbers, because those are the numbers that are going to match. Okay, so we're only looking for 7506. Didn't get it. So now we're looking for 9032. It did, but it's flat, so it didn't move by 5, right? It's still at 9. So the previous was 9.9032. Now it's flat, so it's 9.9032. Okay, so we're still looking for it. 6885 is what we're looking for now. That went flat as well. 5906. 5906 right there. So let's go back one. That's 9. And by the way, I have seen that at some times, this, when the thick orange is pointed up, and that's the value, and then it points down and it gives us exactly 5, a difference of 5. So instead of 9.5906, it'll be 4.5906. But if it's going from up to down, it's less consistent. But you might find that it's just as consistent for you at the times that you trade. So right there, look, 9.5906, and then right here, 4.5906. So let's just look at this one and see how this one worked out. So we'd be looking for, our entry would be right here. Put on this magnet. Right there. And our, so 118.284. So we're going to go to 118.264. And that's going to be right. Oh, I forgot. I can't modify that, can I? Edit. Oh, man. I just remembered I can't do that with green chart 2. Okay. So 2, 6, somewhere in there. I'm not going to go too crazy with it. I'll just measure instead. Okay. What is that? 2.3. Yeah, so that's enough. Yeah, that would have gotten it right there. Okay. So you can see, I mean, it's really, really on both of them, which is kind of bizarre. On both of them, it's still registering, right? Okay, so right there, our entry 7506, we can see back here, it was erase drawing 63.7506, and right here it's 13.7506, and entry 18.289. So we're going to go to 18.269. No, sorry, 18.309. Right, 28. Yes, and then our stop loss is going to be 249, 118.249. Right there. So we go back. This started already pointed up, and then it continued, and then majors are pointed up as well. So right there, we would have taken our buy or long trade. 11, 12, 13, 14, 15, 16, 20, 21. So it's like 50 minutes right there, right? 50 minutes to that point. Finally, it would have gotten above by about 3 micropips or so, and that's enough to cover spread. Okay. So it would have taken a solid almost the whole hour, to get into profit, but or to take profit. It would have been in profit. It looked like most of that time, the vast majority of that time. So not too bad. Okay. So let's go back to another example here. And here's another one that could likely have been active while the other one was setting up, and so we may have been in 2 trades here as well. So right here, negative 92.90503, and right here, 42.90503. So negative 42.90503, and then exactly 50, 42 to 92, 90503. So majors are pointed down. So then we would take our entry right there, 118.300. So 118.280. Oh, where is it? Right there. And 118.340. Right there. And here again, the thick orange was already pointed down, and then we got the indication. And thick orange is pointed down again, so this would be a sell, right? So we want thick orange, whatever direction thick orange is pointed, we want majors to be pointed, and they're both pointing the same direction with the proper value. So let's go forward. 1, 2, 3, 4, 5, 6, 7, 10. Whoa, went too far. Holy cow, where did I go? How did I get to 9.2? Holy cow, I went way back there. Okay. Let me find my lines here. Nope, not that one. Was it this one? Yeah. Okay, here we go. Sorry about that. So 1, 2, 3. No, that wouldn't have been it either. What the heck? Man, where were we? It's not there. Must have been the previous. Yeah, here we go. Okay. So we're trying to get down to that blue line right there from there. Okay. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So again, we would have been in 2 trades right here, right? So we would have been in the second trade. And right about there, it would have finally come out in profit if that was enough to cover the spread. If that wasn't, that was. Okay. So right there, we would have come out of that trade. We would have been in a buy right here, so it would have been negative in that trade, and then eventually filled that trade. So right there, that first trade came out, but we would have been in a second trade. So what is that? It's like 4 setups right there. And again, I'm not sure. I'm not 100% as to why that works so effectively. Most of the time, I can see it. I can figure it out. But it perplexes me. And the one we saw last week was also really perplexing because you can get there are those scenarios where the thin orange could be visibly higher than the thick orange, but the value still be below the value of the thick orange. And so here's the rub on the one for last week, because I realized something. And just like you guys, I'm getting used to green chart too as well. But I realized something with this setup is that, and matter of fact, somebody else had pointed it out earlier this week as well. But you'll notice that on this setup, if you, or just in general on the TNTs, sometimes depending on how you adjust and where the thin orange line is in comparison to your candles, it can move, right? Like the thin orange can be above in one instance and then below in another instance. I'm trying to find an example of that. But there are instances where just because of the way you scale it, the way you adjust it, how many candles, how wide it is, that could affect the position of the thin orange as it applies to thick orange, because they're basically on different scales, right? And so that's, but aesthetically for that setup that we showed last week, it has to be visibly lower if you're selling or visibly higher if you're buying. But again, by the way, this is the same kid that showed us that first one from last week. He's the same one that showed us this one, and it's just really perplexing. And I'm not entirely positive as to why it does that. So I want to go to a higher volume time. Let's erase all these lines and let's just float them. Let's just look at them randomly. Because I think he may be trading them like 2.5 take profit and 4 or 5 pip stop loss, but he's also trading at a higher volume time. So let's just do like 6 a.m. Let's say 6 a.m. Mountain, 8 a.m. Eastern. So that's going to be 12 on green chart. So let's go to 12 and so it's going to be faster. Okay, so let's look for these. So here's about 6 a.m. And here's how I figured out how to find them really fast. So if you guys are going to go and back test this until your eyes bleed, because this is crazy, you'll have thousands and thousands of examples. But we're just going to look at the decimal numbers. We're not going to look at the whole number. So right there, that's 0. That's not going to count. So in other words, if it goes to negative 50.00000, that doesn't count, right? Because we're not using 0, we're not using negative 100, and we're not using 50. So it has to be another number. So let's find another number. Okay, right there. The only numbers I'm looking at, and I'll read these out, 46682. That's all I'm looking for. 46682. So go to the next. It just so happens 46682. Okay, so then I go back. 19 to 69 is 50, and everything else is there. 46682, 19, 46682, 69, 46682. So it just so happens there's one. Okay, so there's one. Let's look at our entry, which should be right there, 118.363. So we go to 343, right there, and stop loss. We'll just use the 2 and 4 like we've been using, but we may have to adjust just because it's higher volume. But we'll check. 118.363. So it's going to go to 118.403. Right there. And that's 4 pips. Okay, let's go forward. 1, 2. Oh, as we're going forward, by the way, we got to be looking for other setups. Okay, so 1. So that's 02805. Nope. 74057. Nope. 71252. Nope. 18665. Nope. 18665. So there it is again, right? So that's 82.18665. So we want the other one to be like 52 or 32. Yeah, 32.18665 and then 82.18665. So right here we would be in another trade. This one would be for a sell, just like the other one, as a matter of fact. So right there, 118.393, we're going to go down to 118.373. And 118.433. Okay. Oh, this guy has to be blue. Okay. All right. Let's go forward. So from right there to there, we're at about 5 minutes, right? So not much. 6. So that one lost right there. And then this one would still be active. 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 minutes, that one would have worked out. 3 pips. Now, check this out. If we go back, look at this. So 118.403. What if this was 503? That's what I'm saying. Like with this smaller chart, or 413, right there. What if that was like that, and the take profits, right? So 118.393 instead of 373, it's 368. 368, because that's 2.5 pips, right? And this one back here would be 363, so 342. So this would actually be 337. 37, and stop loss would be 363 to 413, right? I think we have that, 413. And then this one, 393, that would be 443. Right? Okay, so now we have a 2.5 pip take profit and a 5 pip stop loss. So let's see if that would have made the difference for this one, which we know lost, right? So right there we would have entered our second trade, and the second trade would have come out. So the second trade is clear. Oh, third one got close. Oh, no, it still would have stopped us out. But we got a lot closer, right? Okay, so let's look for one more. And this is why you backtest, because you don't want to just guess, right? We're just looking at a random time. You want to backtest. And obviously, even after you backtest, you're still going to hit losers. It's not like you're not going to have losers, but okay. So again, when I'm looking for these, I'm just looking for these numbers, 18665, and I want to see if the next candle matches, and then I'll go back and see if it's 50. So 18665, nope. 0, 0, nope. 01156, 01155, nope. 25928, 25929, nope. 50, nope. 96642. Oop, there's another one, but that's flat, so I'm not even going to look at that because I know it didn't move 50, it just moved sideways. 02254, right there again, flat, so we're not going to look at that one. 56366, there we go, 56366. See, it's easier to find it if you're just looking for those last numbers. So negative 83.56366, and then right here should be negative 33, which is a difference of 50. 56366. Here's the kicker, guys. Check this out. Thick orange is pointed up, and there's a red candle. Okay, but we're going in the direction of thick orange and majors, which would be up. So right there would be a long trade, even though in both of these instances, which by the way, that's more of a sell signal, right? We know that, thick orange up with a red candle, that's more resembling a short signal than it is a long signal. And we also have the same thing right here, but we're just going to follow the rules. The rule says that the value changes by 5 or 50 in this case. If thick orange is up and majors are up, then we buy. If they're down and majors are down, then we sell. So right here, we'd be looking for a long trade, 118.350. and we'll just use the 2 and 4 like we've been using. So 2.5 and 5. So 118, 370 right there, and 310 will be our stop loss. Okay, let's go forward. One candle, and that moved 4. So whether it was 2.5 or 2 pips, it would have gone 4, and no drawdown, very little drawdown. Let's see, 2 micro pips. So it's really, really consistent. I mean, you got to give it that, right? But it's definitely something you have to sit there with your eyes bleeding and watch as each of those candles change, right? 0, you can take a break. 0, you don't have to look at anything. Right there, 18,890. Nope, 32,362, 22693, 90927, 81705, 0, 0, 23943, 50705, 98994, 72231, 0, 0, 86529, 86529, right there. 86529, 43, 86529. And it's flat, that's why. 86529, 08560, 22063, 52877, 71078, 57310, 15025, 53206, 35323, 71535, 94681, 38033, 57479, 14127, 0873110, 42226, 46813, 36725, 44827, 49136, 49136. There we go. Okay. Andre, check it. We'll check. Let's take a look at it here really quickly. Hold on. So 54.49136, and then it goes to 4.49136, which is exactly 50, right? So 18246. So 18266. 18266 right there, and stop loss 286. No, sorry, 206. Right there. Okay. 1 candle, all good. So that's what I'm saying, right? Earlier in the day, they're going to go real quick, right? I mean, that thing just 1 minute, and it could have been like seconds within that minute. All right, Andre, let's play with that. Let's go on. Let's use a 60-minute. Let's check this out. Yeah, because that's where I would prefer to use it, because it's easier to backtest on a 60-minute. I'll be honest, I've never manually. I've never backtested a 5-minute or 1-minute setup entirely. That's just a lot of time. That's crazy. Okay, so let's go back. So here's the 12 o'clock hour. We're gonna have to go back further than that though, because let's go to 9/7 at 12. Okay, so 58998, 72408, 91749, 74516, 82767, 27566, 27566, but it's flat, so it probably didn't move 50. 84600. There we go, 84600. So right here, 23.84600, and then right there, 73.84600. All right, let's back test this one. All right, let's see how it does. Let's look at 6 candles. 1, 2, 3, 4, 5, 6. Wait, 1, 2, 3, 4, 5, 6, 7. Okay. 1, 2, 3, 4, 5, 6. So that should be 6 candles from our entry. 1, 2. Oh, I guess not. Let's go back and double check. 23, 73. Okay. 1, 2, 3, 4, 5, 6. Right there. Okay. So short, it went about 1.4 pips, and long 1.6 in that same hour, and then it went up 10.3. So no good there, but doesn't mean it's not a good setup. It could just mean that that was just one that probably wouldn't have worked out very well. Okay, 4600, 47282, 87892, 40609, 46913. There we go. Oh, it's flat. Okay. 66415, here we go, 66415. So 17 66415 to 67 66415. So right there, let's test that. Let's go from there. 1, 2, 3, 4, 5, 6. Look at that, right? 9 micropips, 9 micropips of drawdown. That's not drawdown, so that's 9 micropips of drawdown, and then after 6 candles, 28.7. So what did it do initially, right? Right there, 4.2, and less than a pip drawdown, and then by there, 9.8, so double that amount. So nice. This could be something that's really good on a 60-minute. All right, let's keep going. Let's look at a few more here. Okay, 66451, nope. 55406, 55405, nope. 52556, 82651, 78100, 30880, 82874, 0000912. Oh, there we go, 00912. So 25 00912, and then 75 00912. Okay, so let's see, 6 candles. 1, 2, 3, 4, 5, 6. 17 up. Nothing down. 4 micropips down after 6 candles. So that one wouldn't have been very good. Let's look for one more. 52763, 31732, 78970, 50523. There we go. 50523, 9.50523, and 59.50523. Let's see how that one does. 1, 2, 3, 4, 5, 6. So 3.9 right there, 6.3 to the peak. Profit drawdown max was about 1.5, and then 6.3. Okay, so not bad. Andre, I mean, definitely go and check it out, man. Try it with a 6 candle method and see what'll come up for you. So that one really interesting. Again, I'm perplexed, and believe me, I'll find the answer. I'll figure out why or how or what. And when I do, I'll share that with you guys. But for now, it's just a cool setup. It's kind of interesting. Andre kind of posed the question, can we use it on a 60-minute? But yeah, I'm sure you can. You can use it on anything and just back test and then see how it plays out in your back testing. But, I mean, if we looked at that as a whole, you know, that was like, I mean, just those 4 trades, which is not relevant at all in the grand scheme of things. It would have been 50-50. But 4 trades is definitely not enough to determine, you know, whether it's going to be viable or not. But yeah, Andre, go back like 3 months and play around with it, see how it does, right? Kind of figure out its range and see what it does, and you might be able to find something cool with it for the times that you trade. All right, awesome. So we're going to transition really quickly, guys, and wrap up here in a moment. As always, I want to throw out the offer for Trader Light. For those of you guys that are not part of our organization yet, you guys got to jump on this, $10, and we'll donate that 100% to charity. You're going to get the indicators that you were just looking at right now that Andre is actually talking about going and using the back test. Andre is one of our members. Real-time alerts and tutorials for those alerts, live trading webinars and coaching webinars, on-demand training videos, trader chat for mobile and desktop, and 2 one-on-one coaching sessions. And we are, this is something that will be phased out, the 2 one-on-one coaching sessions. We're not sure when we're going to phase it out yet, but it's going to be soon. So get in on the Trader Light, and let's schedule those sessions. Otherwise, this is one of the things that's going to be going away. Before it was free, now it's $10. Now it'll remain $10 or more, and you're not going to get one-on-one coaching sessions. So these are beginner coaching sessions, so you don't have to have any experience, or you can have mountains of experience. It doesn't matter, and you're still going to be able to get tons of value out of this Trader Light program. Go to daytradesmart.com/free and sign up for $10. That $10 will be donated to charity, Feeding America. So your money will be going to a good place, and you'll be able to learn how to day trade and see if we're a good fit for you. Our other programs are going to range anywhere from $8,000 to $23,000. Actually, we got 2 new programs that I'm not going to talk about right now, but we've got 2 new programs that I don't think there's one person on here that wouldn't be interested in. So you could, if you'd like, go to our site. Just you can go to go.daytradesmart.com, or you can just go to daytradesmart.com, and right now it's just going to send you to go.daytradesmart.com, and you'll be able to see some of those, but we're not going to talk about them right now. Get into the Trader Lite program. We can talk about them later. We'll do some sessions with you guys. We'll show you guys some trade setups. We'll have you practice them so you can see for yourself how they work, so that you can evaluate if this is something that works for you, right? If you're able to do it, if it's valuable, if it meets a personal need. And then if we feel like you're a good fit for us, right? You're a good student, you show up to appointments, you're teachable. If we have that mutually aligned understanding, you're good for us, we're good for you, awesome. Then we can talk about allowing you to enroll into our day trading university. As always, guys, it's a pleasure. Appreciate you guys' time today. Have a good weekend. We'll see you next week, and happy trading.